We're going to head out now to our stock debate. The question we're asking today is, Citi has upgraded BHEL to a buy from a sell, and it has also upgraded its target price to 335. Would you agree? Is BHEL a good buy at this price? Joining us are market experts Ajay Bagga and Kunj Bansal. And, of course, we've also got Anuj in studio here. But before we get into the debate on whether Citi's got it right or not, let's get you some highlights of that Citi report with Pragya Bhardwaj. Pragya.
Well, thanks so much for that, Minika. It's a big upgrade and a turnaround in the way they were viewing the stock. From a sell rating, they've upgraded it to buy. It's a 90% increase in the target price also from 176 earlier, now at 335. This would imply a 20 to 25% upside from where the stock is trading at currently. Not just this, they've called BHEL their top industrial pick as well. The rationale for this change in the view on BHEL is, first being the fact that they believe that there will be better order inflow prospects now, which will arrest the down cycle that BHEL has been going through. Case in point, they highlight that the company is already L1 in 2.8 gigawatts worth of orders, and there is a very strong pipeline that they can view over the next 12 to 18 months. They believe there is a case for compounded annual growth rate in terms of earnings for almost about 43% over the next 2 years. They believe the stock has underperformed for about 5 years now, and the outperformance has just started, likely to continue a lot more, even putting into perspective what has happened with the stock price until now. They believe the stock is severely underowned by the FIIs and the DIIs, which will further provide support to the stock. They believe the black swan event which has happened with the company is the Telangana MOU which they have signed, which would provide orders worth about 6 gigawatt to the company. They also believe that despite the fact that the pricing has collapsed in the sector over the last 3 years, the companies managed to hold on to their gross margins. In fact, for the first half, they managed to report an expansion in the overall gross margins by roughly about 475 basis points. The last key pointers that they've highlighted is that the company will benefit from a low base. So going forward, they are building in almost about 20% growth in the sales, and they also believe that the recent order wins have been slightly at a higher pricing, which will negate all of the low-priced EPC orders which had now formed a big chunk of their overall order book. So on the back of all of that, that big upgrade from Citi. Back to you.
Well, joining also Ajay and Kunj Bansal. Ajay, when come to you first. Now, is this an order, or is this a buy on hope, and just that it's been beaten down so much and the worst could be over, or is there something more fundamental there?
Well, I don't know, Senthil, I have missed it, so I've not read this report, but I'm very skeptical about this company. Overall, if you see the sector, the existing capacity also in the coal-based plants is running at about 60% capacity utilization. Even the power minister has said that we would be looking at more optimizing the existing capacity, the usage of it. So 145 gigawatts are running at 60% or below that. 84 gigawatts are under construction, out of which BHEL has about 26 gigawatts, out of which 15 is in the private sector, 9 of which are directly impacted by the coal block allocations. You look at their receivable days has gone up more than 400 days. Look at the working capital to sales ratio, nearly now 49%. So low margins, low sales, low order book flows, and the sector getting hit very badly, which is giving 80% of the revenues to the company. So I am a little confused by this report, and I really do not subscribe to this report. I don't think the stock has that much legs. Even on a hope basis, it's 2 to 3 years away.
Okay.
Any recovery in the power cycle, it's not going to happen immediately. We have enough pipelines of projects which need to be completed, and there are enough headwinds in terms of fuel linkages,
sure,
in terms of low PPAs, in terms of grids not being there to transport power from surplus areas to negative areas. So all those issues need to be resolved. I really don't see how this kind of a price can be justified. Obviously, it has to be on a very high earnings growth, because the PE ratio also is higher than the average, for the stock itself for the last few years and for the sector as well. So,
I think in polite terms, the question Ajay is trying to ask is, what exactly is Citi smoking?
All right. Okay. Let me tell Kunj
in
that.
very polite terms.
So Kunj, what Citi is saying is that there are better inflow prospects. There are Telangana orders which could come in, and that could provide a big opportunity. There've been solid cost control at BHEL, so you could see margins actually improve. And so the worst could be behind BHEL, and after 5 years of a downturn, you could see it now being at the verge of an expansion. Would you agree, and do you think that it's time to relook at the stock?
No, I don't think so. While I have not seen Citi's report or not, I am not aware of that. You know, the stock has moved from a low of 90 rupees, 90 to currently 265 over the last 1.5 year period.
Okay.
So if at all there was a time to look at the stock or upgrade it was during the last 18 months period, or maybe leave aside last 3-4 months in the 12 months period, number one. Number two, the cash in the books of the company has consistently been coming down, and its working capital stretch has been regularly getting worsened quarter by quarter. If you look at the number of quarters, the quarterly results till recent quarter of September, there is no sign of improvement and doesn't look like. So one is whether you are looking at the company in the hope or actual signs. So I think it probably might be more of a hope.
I'm just pulling out one line from the report which perhaps could hold the key, because they say the stock is severely under-owned by FIIs and DIIs. So is this on hope that liquidity is coming into India, is chasing all kinds of ideas, is chasing finance ideas, is chasing recovery ideas? So if money can go into mid-cap and small-cap, why can't money flow into BHEL? So could it be just liquidity could just propel the stock?
Because money is not fool. Money doesn't have emotion.
Yeah, I was just going to say that. L&T ke baad kaun BHEL?
Money goes where it sees return. So I don't think that is the logic which will apply. And had that been the case, why did it not happen till now? Money has gone to every stock where they had a potential possible return upside or the improvement of the results that are expected. In fact, within the large cap space, if one were to have, and within the infrastructure space, there are better opportunity. And if one were to restrict within power sector, there are in the mid cap space better equipment suppliers and turbines and generator companies which have given far better returns and are likely to give better returns from here also, and is visible in their quarterly numbers as well.
In fact,
so I don't think that's the logic which can be applied.
Yeah, this is one point which is I don't take at all, because if you see the shareholding pattern of BHEL for last 4 or 5 quarters, there's government holding at 63%, FII plus DII consistently is 32%, and others is 4%.
Substantial part of the public shareholding.
Others is only 4%.
Yeah.
Okay. So the room for FII plus DIIs to buy is only 4%, because the government holding itself is 63%, and FII plus DII is actually consistent at this 32% mark for last 2 or 3 years.
So you got Citi one, and you got Kunj and Ajay on the other side saying, not a good buy.
Yeah, well, Kunj, you mentioned that there were several other stocks in competing categories that would be much better picks vis-a-vis BHEL. You want to run us through some names that, according to you, look much, much better than where BHEL is right now?
Yeah, I realized as soon as I spoke that you are going to carry Nonetheless, I think as I said, in the large cap, so while there is no specific power stock available, I would extend the power to the overall infrastructure space. And in that, I think L&T is one stock which I clearly feel will continue to do far better and continue to outperform. Its results are also likely to improve, although company, after its September quarter numbers, marginally downgraded its growth guidance. But I think gradually we should see the results coming in better, and so will we see the stock performance, which we have already seen as well. So that's in the large cap space, and within, as I said, since no power equal is available in the infrastructure. Within power, mid cap companies, there are 1 or 2 names like Triveni Turbines. There is TD Power Systems. So these are the stocks wherein we have clearly seen improvement in numbers. There is one more stock called Techno Electric. I think these are 2 or 3 mid-cap companies where we have clearly seen the results improvement in the last 1 or 2 quarters, certainly in September, if not in June quarters. Some part of the stock performance has already come in fact, so much so that their valuations currently probably can look on the expensive side, and all these 2-3 stocks are trading close to their 52-week highs, unless they have given correction today. I have not noticed. So with the rider that with the current high valuations and closer to 52-week high, if this current correction offers anywhere in the range of 10 to 15% correction from their peaks, which will also of course bring down the valuations, given the numbers that we are expecting, these are the stocks one can clearly look for investing.
Ajay, if I was to take L&T off the table, are there any other stocks, companies in the space that look much more attractive to you than BHEL? Kunj has already supplied us with some names.
Yeah, I think Power Grid, again, not in the supplier space, but overall it has suffered because of the FI limit being reached. But overall, I think very good company, Power Grid could be one. And the other one which I like in the similar space would be Thermax. I think Thermax makes a much better investment thesis than BHEL. And, just to add to what we were talking, Anuj pointed out the ownership. The second point is, even on the expense side, there's very little that the management can do. The employee numbers have fallen because of retirements in the first half. But the pay commission, pay hikes come in by 2017. So very little on the materials and on the employee side that the company can really impact. So unless you get a huge operating leverage by getting huge number of orders, which they start really executing very fast, very difficult to see a turnaround happening in BHEL, even for the next 2 years.
All right. So, there we've got it. Both our market experts there don't agree with the Citi take on BHEL.